Harders, hope you guys read the announcement yesterday by the White House. It's pretty significant, so listen up. Okay, this is a big deal for you, your buyers, and obviously your sellers. So they announced that a $200 billion directive. This directive make basically forces Fannie and Freddie, and don't forget they're under conservatorship still, to purchase MBSs, mortgage-backed securities. For those of you guys who don't know what MBS stands for, and I think the objective is pretty clear. They're looking to drive down mortgage rates. There's no ifs, ands, or buts about it. And by doing so, obviously, it injects liquidity into the housing market. And I think couple that with whoever is chosen, any of the four, for Fed chair in February, it's going to mean lower mortgage rates, right? Um, so with absolute certainty, I think that not only are we going to have lower mortgage rates in 2026, but Q1 there's going to be a significant drop in rates. So I think, look, the market over the last few years, even when we hit 8%, didn't dip, right? So that means the demand for housing never left the market. And then there's pent-up demand, as you know. There are millions of buyers on the sidelines, and they've been waiting for rates to move. But when they do, they're not going to just trickle back in, right? They're going to flood the market, right? So having your buyers wait, I don't think protects them. I don't think you're doing a service to them by just saying, okay, wait until rates go down and then we'll start looking for homes. I think the only thing it does is it guarantees more competition. Obviously, there's going to be, think about 2020, 2021, how many offers we would have to compete against. So there's definitely going to be more offers. I don't think it's going to have that much pressure on pricing because I do think that we're going to see more inventory. I think we're going to see a lot more inventory, especially for those who have been waiting to purchase something else, but haven't been able to because rates have been so low. But that creates demand as well, right? So why do I give you this information? Because I want you to educate your buyers right now. You gotta talk to more people, and not just the buyers that you have in your database, right? It's there or who are tagged, but you gotta talk to everybody because you don't know without having a conversation who's in the market to purchase, who's been waiting, who's nervous. I think positioning them in early is important. Um, I think convincing them to act is your responsibility before the rush returns. For your buyers, waiting might feel safe, um, but that can get expensive, right? I think, yes, they might get a lower rate, but they're gonna have to compete against so many more buyers, right? So your responsibility right now is simple. Get your buyers ready before the market reminds them um, why they shouldn't have waited to begin with. Do your thing. I recommend emailing everybody. I recommend creating reels. Rates are not going to stay at the levels, and I'm seeing it this morning with a 10-year bond taking a little bit of a hit. So I definitely recommend you guys do what needs to be done over the next few days and remind everyone in your database, not just your buyers, of what's going on and how the White House announced 200 billion might not be enough. And I don't think it's going, it's a move. It's basically the White House saying that they're here to take care of housing, right? The $200 billion is nothing. It's probably going to lower rates 0.15, zero point 0.2, max a quarter, right? But it is them basically telling us that their focus is on housing. There's even a lot of speculation about them not allowing corporations to purchase housing, which is a huge deal. So definitely a lot of attention from the White House on housing, which obviously is going to make things very busy for us. Cheers.